Hey guys, it's me, Nicolette Mashile. I am also known as the Financial Bunny. Welcome to the Financial Bunny TV. Today, I want to talk a little bit about a book that I am reading that literally is blowing my mind page for page. And I know I'm late to the party, but that's not the point of this conversation. The book is called Atomic Habits by James Clear. And let me tell you, every single time I page and I read, it's just absolutely fantastic. And it's so funny that I'm reading this specific book because one of the things that I've decided to do, or I saw a tweet the other day, and somebody was like, just lay low for 6 months, disappear for 6 months, and do these specific things for the next 6 months and see your life change for the better. And some of the things that I've wanted to do was to get into shape, is to lose a bit of weight, to look good naked. I want to make, obviously, a little bit more money and build my wealth. I want to finish building my house. I've actually started a gin I'm crafting a gin that I want to put into the markets. There's the animation. So there's a lot of things that I'm currently busy with. And I think that if I lay low, I will actually start to achieve them. And one of the habits that I wanted to change was to also get a little bit more knowledgeable, right? So I've decided to read every single morning when I wake up. If I have like a call time at 6 a.m., it means I need to wake up at 4:30 just so that I can put in at least 10 minutes of reading every single day so I can learn something new. So that was my first point of contact in terms of changing some of the habits that I have, right? And it just so happens that the book I then decided to read, I'm reading 2 books at the same time. The one book is Atomic Habits by James Clear, and the other one is Just Keep Buying. I forgot who the author is, right? So these are the books that I'm currently reading. And the one thing that is insane about Atomic Habits, it speaks about habit forming, right? Things that you've got to do now so that they actually give you the result at the end of the day. But he talks about how, for instance, something doesn't happen until you realize that it's happened. But the only reason why you're realizing that it's happened is because there is that change. There's a moment after the plateau. There's a moment when things change that you then realize that I'm actually starting to achieve these results. And I'll give you an example. If you are going to lose weight at the gym, the first day that you go there, you're going to get on the scale and you wouldn't have lost weight. The second day, the third day, the fourth day, the fifth day, the sixth day, 7th, 8th, 9th, 10th day. But after 3 months, when you get on the scale, you realize that actually I've lost maybe 2 or 3 kilograms. And that's the crazy thing. It's like somebody who works in the mine. They keep blasting and they keep blasting and they keep blasting. They can blast for like 3-4 days and never find any minerals or whatever mineral that they're mining. But when they blast on day 10 or they blast on day 20, they may just find that. So you chip away at this thing until the momentum hits it at the right angle and on the right day, and then you reap the rewards. So that's what I've been reading about. And it made me think, a couple of years ago, I made a very bold goal. And I said to myself, Nicolette, by age of 30, you need to have 10 rental apartments all paid off. That was my big goal. And in fact, if you read my book, one of the other goals that you will see is this private jet that I want to buy, right? Now, the problem with this goal, and this is the chapter that I'm currently on, where he speaks about goals versus systems. The problem with this goal is that it's ambitious. It sounds insane, right? It sounds absolutely insane, right? And anybody that can boldly go out there and put it out there, because when I made this goal, I think I was 27 years old. I'd just gone, 27 or 28, I'd just gone into rental property, and I was seeing, the value of owning property. And I made this bold statement, and I made this bold goal, and I was like, 10 properties by age 30, all paid up. Okay, the goal it was attainable. The goal was realistic. At the pace that I was at when I was at age 27, I probably would have been able to achieve that. But I sat back and thought it was going to magically happen. So a lot of us have these big and bold financial goals, and we think that they are supposed to just happen because we've got this ambitious goal. I'll give you another example. And in actual fact, he speaks about survivor's bias. So survivorship bias is basically this bias that we all look at the people that have survived and have been successful, and we disregard those that didn't be successful. And I'll give you an example with somebody who is a friend of mine. Well, I assume we're friends. Theo Baloy, for instance. He is a successful, fastest growing founder of a sneaker brand. Now, when you look at him, it is ambitious to be either the most successful or one of the most successful or one of the leading sneaker brands in the country, right? So we all look at him and we're like, that's the goal. The goal, he's attaining the goal, he's achieving the goal, and that's the goal. It's an ambitious goal, right? And then we don't regard every other person that tried to be the leading sneaker brand in the country. Every other brand that has failed at getting that milestone. So we almost try to differentiate the winner and somebody who didn't win based on the goal. And we look at the one who didn't win and we say, but maybe their goal was not as ambitious. That's not true. A football match, for instance. In a football match, both teams want to win. Both teams are going there winning. The goal is to win the game. Nobody goes in there like it's a practice match. Everybody goes in there with a win. The goal is to win the final. For instance, Champions League. The goal is to win MTN 8. The goal is to win Nedbank Cup. You have a goal. Both teams have a goal, but both teams cannot win. The team that has the best systems is the winner. Both teams have a goal, but the team that wins is the team that has systems in place. So you look at somebody like Theo, you realize, okay, maybe the differentiating factor here is not that he had a goal, but rather that he had systems. And sometimes those systems are made up of small habits that one needs to change. So you want to attain your financial goal. I want to attain this 10 properties, right? I want to attain 10 properties, rental properties, all paid out, or paid up rather. So I had the ambitious goal, but I didn't have the systems. So what are the systems that I need to put in place to be able to achieve that? One, I need to make sure that I am clearing out my credit. So how I'm going to buy these properties? Am I buying them in a business? Am I buying them in Nicolette, in an individual as a capacity? Are those structures ready to buy? What is my buying? Am I buying cash? Am I buying with financing? If I'm buying cash, have I got the capital to be able to do that? Am I actively putting away that money so that I'm able to do that? Or if I'm going to buy via financing, do I have the structures and the right profile to be able to access that type of financing? These are systems that you've got to put in place, but they come with small habits. Now, for me to be able to get the financing, for instance, let's say I'm going to finance them using a bank. If I'm going to finance them using the bank, affordability is going to be a big thing. The other thing that's going to be a big thing is credit profiling of my business or myself. So, okay, do I have the affordability? Does the business have a turnover that the banks can actually believe that I can be granted a facility to be able to buy these properties? Or do I need to buy one every single year but still prepare my affordability to be able to access buying one every year? Am I increasing the way I make money? When I sit with my tax guy or my accountant and I say, I want to pay less tax, these are my systems that I'm building in. When I say to my accountant, check for me which areas of my business actually make money and let me concentrate on those areas because they have been proven to make money. I'm putting in the systems. Now it needs habits. Okay, what are the habits? Let's say, for instance, YouTube is where I make the most of my money. That means I need to be consistent with YouTube. That's a habit that I need to form. I need to form a habit to be consistent with YouTube, to push out those videos because YouTube makes me the most money. Now I've got a system of understanding what makes me more money. That means I'm building on profitability. Profitability ultimately puts me into a better position to access the credit facilities that I'm looking for. On a credit profiling side, okay, I need a good credit profile. But for me to build a good credit profile, I need to go and take out credit. So the banks can see that I can manage credit, but I need to manage it well. I need to pay on time. I need to pay when I say I'm going to pay. I need to keep my credit utilization low because I'm building a system. But to build those systems, I need habits. So we all dream about these big financial goals that we have. But do we have the systems? Because anybody can have a goal. Anybody can have a goal. It's not hard to have a goal. Goals are free. Anybody can wake up today and say, I want to do this. But do you have the systems? And are your systems supported by the right habits? This morning, I pay all of mine. So I don't have debit orders on a majority of my stuff because I need to feel paying to know that I need to finish off certain things. So all of my City of Johannesburg, all of my rates and taxes, all of my levies, all of my internet access, things like softwares that I use, I pay it myself every month. But part of paying every month, and I do this, it's funny because I will do that first. I will pay those things. And I know it shouldn't be this way, but I need it for me. I will pay those things first. And the pain of paying pushes me to upload money into my Frank app, to upload money into my Easy Equities account, and to pay my stock fails. Because that's paying myself first. And heck, there's no way I'm going to pay all of those amounts, rates and taxes, levies, whatever, rental, all of those things, salaries, everything. And that huge amount of money comes out of my bank, but nothing goes to me forming a habit to invest because there's a certain wealth that I want to achieve. So I'm asking you today, I'm saying to you, good that you've got goals. Goals are not useless. They are important, but anyone can make a goal. The question is, are you prepared to put in the systems? But again, systems don't work unless you have the habits and you change the habits that you have to make sure that those systems work. Then you've got to automate those systems. Make it easier for yourself. It's just a quick video. Remember, nothing that I say in my videos constitutes as financial advice. If you are looking for financial advice, please speak to somebody that is certified and registered with the FSCA. I will see you guys on the next one.